Hi, everybody. This is October 22nd. As usual, we'll begin with Bitcoin, BTC. I have opened 12 hours to see what is happening inside to start with, and then we'll zoom out and see the structure. Okay. So the orange box that I had added is meaningful. Maybe I could keep up to this. I think this is good enough. This kind of approach is very simple sometimes for those who are looking for long term, like multi-week, multi-months. For them, it has to come out of this box, means on the upside, uh, which is around 20,500, right? It simplifies. Now for those, they would not care what is happening within the box, because what we've been seeing for a very long time, that it has been moving sideways. Now this is one segment. The consolidation is much larger than this. So if we zoom out a bit, then we're talking about a consolidation which ranges from 17K all the way to, let's say, 25K. Hmm? So this is outer layer or outer or parent consolidation. So I would say this is right now more local and this is more global. Okay. So unless and until it comes out this orange box or this high is broken, I think there's nothing we can talk about its bullish move or higher level. So that's a requirement, so to speak. And once that is done, then we are in the business. Then we'll see how it performs. But the least criteria, the minimum criterion for us is to get 20,500. Anything less than that is not going to help. So if it pumps by a couple of percent here and there, I'm not going to entertain. That's not enough. Okay, so maybe we can be hopeful, but it won't give you a good trade because it has been doing like that, right? So that's a minimum condition. And once it is out, then I would like to see it about 23K. If it is about 23K, if it is able to break about 23K, I think it should be able to break about 25K as well. And if it is able to break about 25K, I don't think other levels will matter. And then it could rush for 32, 33 kind of range, which right now it's at 34K. Maybe I'll bring down a bit. 32, 33K range is the latest resistance. For now on the call, you may consider 32, 33. I'll update later on. At this moment, I'm not updating the chart because it has to cover a lot of ground here. But once it breaks out on the upside, I'll fine tune it. So right now I'm not bothered to fine tune higher levels. Okay. So that's on a bullish side, right? That's a bullish um, setup or set of conditions, so to speak. What are the requirements? The first requirement is to break above 20,500. That's the first checkpoint, and then 23,000, and then and I don't think these are um major. I think the next major one is the ultimate one is 32, 33K range. Okay. And if it changes, I'll update you. Right. So these are the three key levels that you might want to, you know, set an alert for, something that you would like to track. Okay. So anything below 20,500 is not good enough. Hmm? So that's on the bullish side. Now, but the bearish side, now the, we know that right now it's more in equilibrium because of this move from this latest move, this particular move that I'm trying to highlight here. It has brought up balance. It is, yeah, it has. Otherwise, it was going down, as you could see. And if it could have hit this one, then probability of breakdown would have been very high. Still, it's not out of the woods, but this is more like extension of life. This was lifesaver, so to speak. Why it happened, I updated, but I'll quickly explain that one as well. So From now, I'll just maybe I'll go weekly once and then come to the broader perspective. Okay. So now weekly level, weekly we're looking for Bitstamp chart, right? That's version. Or maybe, yeah, this is how it looks like. Okay, so this is of course a bullish setup where um, this level and this level, which is the same as I mentioned, more or less. Right. Now, there's nothing more to add, to be honest, because if you look at it, last 4 weeks, it has been going sideways, right? So, content point of view, there's nothing more I have to, because I have already covered so many things from different perspective. Maybe I'll those who have not um, referred my video, I'll highlight few things on a broader scale. Okay, so let's look at this one, right? A big picture. Let's look at the big picture. Okay, so this was the first bull run. This was the second bull run. Okay, this is the third. This was the third one, and the recent one, which started from January 29, the fourth one. So we can say these were the 4 cycles. Okay, each cycle was different in flavor. Each cycle, in when I say flavor, means in terms of time duration, in terms of percentage gain. What you notice here is the first one, very nascent state, like newborn baby. It grows faster. So this is another aspect that people forget. People compare with Bitcoin with stocks or something else. What they, and in terms of percentage gain, and they say Bitcoin is superior because percentage gain is more. That's more, I think, kiddish kind of a comparison, because what happens is whenever asset is new and it's speculative, and when asset is global, it tends to grow faster. For an example, um, Apple stock is a good stock, and if you look at the Apple's history, earlier it was rising faster and it was steady growing stock. And not to forget that stock is not available to everyone. Somebody in Asia may not be able to buy Apple, maybe some ways a little bit, but not, it's not so accessible. Someone wants to buy in Africa, probably it's not available, and so on. So point is, some assets are local to the market, local to the country, and this asset is global, right, and speculative in nature. So people who compare asset in terms of percentage, they are biased. Okay, so that's one thing. If you look at what is happening with Bitcoin, the Bitcoin is actually slowing down. This was near vertical move, then a drop, and then another move. But if you look at the angle of this particular wave, is not as steep as previous one, right? This is like, if this is 90 degree, this is, let's say, 80 degree, this is more like 75 degree, and this move is more like 50 degree or something, little more than 45 degree. And if you look at this one, this is more or less 45 degree, right? And then now correction is happening, right? As you could see, this piece of price action. So that's why, and that's why it is forming this arch, because the tops are flattening. If you look at, because if it had to continue, or if it continues like previous cycle, then we would not have this arch. Now what does it mean? This is also a pattern. This pattern is actually the biggest pattern. This is the grandfather, grandmother parent, pattern, sorry, pattern, you just speak. Um, it's like at that, because it's at a wave level. It's at the entire wave level. It's not just at a cycle level. Usually we look at very, very localized pattern like this one we were talking about. I'm highlighting with a mouse pointer here, right? More, if somebody might cover this one, somebody might cover this one, but sometimes we have to see the whole entire wave, right? Which began in year 2010. Um, so because for a, we, I mean, time by time, not every other day, of course, every quarter or so, especially whenever there is major price action. Okay, and price action, not just price action, but critical phase like this. So the arch is formed because the cycle is slowing down, right? The subsequent cycles are slowing down. That's why. Now, not necessarily it will get flat and come down, not necessarily, but this is really um, um, it's a possibility at this moment. Okay, that if this level is broken down, then it could be devastating. Simple reason being, if you look at the comparison, so now you focus carefully on the low and the previous high. You focus on the yellow line. Okay, this is the low and this is the previous high. Okay, what is happening? This is the distance. Right now, you don't have to measure in terms of percentage. Just look at the relative distance. Okay, we are now comparing cycles. Remember, this is not about one candle. This is about comparing cycles endpoints, so to speak, like high point and low points. So this is low point and this is a high point. And you look at, so this is the distance. So this was the first one. Okay. So when it corrected, right? When the second cycle corrected, it didn't, this was the distance. The third cycle corrected, then this was the distance. Okay. What happened? Distance reduced. Okay. And then when this cycle, last fourth cycle corrected, it came here, right? So why it happened? Of course, two reasons. One, it is not as vertical as previous cycles because the vertical move in terms of percentage is not the same, lesser. So that's why when it corrected, it came close and close. Now it touched. In this case, there is no gap. It touched. And that's why this is super important. This, I'm talking about big picture. Okay, I'm not talking about cycle. I'm not talking about monthly chart. Okay, this is like a whole entire thing, like from right from the inception all the way to the current state. So this is super important. Now people pump and dump we talk about. I think we should think about this. If you really tracking, if you are really interested, then this is the most important aspect that you have to consider in mind. Okay, trading here and there is fine, but if you're really interested, then you need to understand this aspect, in my opinion, because this is like everything. Now, so why this 17K is super important? Because if it breaks, then you may say that the whole entire 10 years of pattern breaks. Okay, because this is a rounding pattern, like rounding top. Okay, now so this is super critical because it has touched this high. What does it mean if it breaks down? I mean, we um, when we talk about cycle level correction like this, so these are all cycle level correction. If it breaks down, it's no longer cycle level correction. Remember, so all this correction that you see is cycle level, means this is uptrend, this is downtrend, up, down, pairing, right? Up, down, up, down, up, down, up, down, which is fine. So this correction is done, or it has hit the limit, so to speak, for the cycle 4. If it goes below, then it is beyond cycle 4's bear trend. Getting it? So that's why it is super important. And what does it mean is if it goes down, then it could touch this, because this is this is, if you split this one, there are two actually points. One, this is the one, and this is second. So it could touch this one, if which is around 13K. If that is also broken, then it could touch 10K, which you hear many times from many people. So these are the two key levels, 13K range. It could be 15K also. There are a few exceptions, but I'm talking about big things. Okay, 13K and 10K. But there's one more thing. I don't want to scare you, but and it won't hurt anything. I mean, even 10K won't hurt the overall momentum. The pattern will be broken, of course. The reasons so first I explained the reason why the pattern would break, because this is the first time it will break below prior high. It never happened before. If it has to, so if it goes below, that's a breaking of the pattern that we have seen here, right? And then it will form new pattern. Okay, that's not a problem. But the point is, then this would be really bearish one, which never happened in history. So you may say this, if that happens, it would be historical. So that's why I emphasize. Okay, now again, I don't want to scare you, but educate in terms of what might happen. Okay, I'm not someone who would think of doomsday. I'm not a person who would think of a moon and, you know, um, major pump and major dump. These are extreme cases, but for education point of view, we need to know the scenarios. And we are talking more about downside. Simple reason being, we are at the critical level. If we are somewhere here around 32, 33K plus, we would not be talking about this, because then we would be going further away from the support, right? So right now it makes sense to talk about this. Okay, and for now it's more for education. There's nothing to worry because it's not happening at this moment. But whenever if it happens, then at least we are aware. Okay, so the ugly pattern that I see is, you will see only when you compress. Usually you see this. First of all, very few people track at the quarterly, and when you quad track quarterly, you see this. I'm sharing some amazing tip. You compress the chart, and then you see something which you never seen usually. When you compress it, again, I don't want to scare you. Okay, you compress it, you see something very interesting. You see, this is V-shaped recovery. This is V-shaped recovery. I'm talking TA now, okay? And this is W-shaped recovery. This could have been a V-shaped recovery if this was not a big drop, like, but still a W. So this is W. You see now, and this could have been a V-shaped recovery. You see this one? This could have been V-shaped recovery when a double top. Right? This is not double top, but this was double top. And this, if this would have gone up like 100K, something like 80K, 100K, whatever, then we could have said, okay, this is another V-shaped recovery. But here something happened. It dropped. See this? Now there is no V-shaped recovery. There is no W-shaped recovery. It is broken. Okay. Now it's here. Okay. Now when you so I would like you to focus on this segment and visualize only this piece of, okay. And this is a head, this is a left hand side shoulder, this is a head, which is right now, this pattern is forming. This is a head and shoulder, this is giant head and shoulder. I don't see people are tracking this. Somebody might be, I don't want to claim that, so I am the only one who's tracking it, but this is on video. I'm officially sharing with you that I see head and shoulder. If it is broken, remember the patterns are formed and invalidated, they need to be tracked. So at the same time, there can be multiple pattern. For example, in Deso, when one would think about a pennant, one would think about a descending triangle, or depends on how you cut, what segment of the chart you take for measurement. Like if you look at the BTC, you will find descending triangle. I'll show you for this zone, which is bearish in nature. Hmm? And but if you zoom out, the pattern could change. So it depends what segment you highlight, and then you track it. So I'm highlighting this pattern, sorry, segment, and you really have to compress the chart like this. Then only you will be able to see. If you do like this, you're not going to see what I'm showing you. You'll appreciate that. Right? You will see only when this is here. Okay, now so if this breaks down, then 6,000 is the next major pattern point of view, next major support. In worst case, it could touch 3,000 again and then bounce off. So that if I talk about this pattern, and if this is broken down, it could come down to 6,000 range, 6,000 to 7,000 range. I mean, the $500 here and there. Okay, and that's a one checkpoint because of this endpoint. Remember, the second endpoint, which is 3,000 range, 3,000, 4,000, which is this. So in that case, it could come down all the way down like this. Okay, so either this or all the way here, and then it could bounce like this. And then this is going to be the checkpoint again. Why? Because then this is the right shoulder, but right shoulder may not form, remember. So first I'll show you. So this is one path, another path where it would go down and then go up like this, and the third one, of course, is where it goes down. Nobody would like to see anything like this, of course, but I'm a chartist. Okay, I'm not bearish. Okay, I'm a chartist. I have no bias. So if I may draw a line, this is my one endpoint. First one, and of course, this is my second. The third could be the lower range. Okay, and this is the right shoulder. This may be invalidated here on this one, which is orange resistance. Okay, and it can come down and bounce, which I'm not showing to avoid cluttering because that's a different pattern. We're talking about this head and shoulder. So this is a pattern which is nasty. Nobody would like to see this, but just for education, I wanted to cover. We just cannot ignore it because it's here. Okay, and I'm telling you, we are at a better, when you have a big picture in mind, we are more humble about, otherwise not fearful, humble, because knowledge brings makes you humble. In my opinion, more knowledge you have, you more humble you become. Depends how you use, of course, but that's how it is. So anything could happen like that. Okay, so right now we are not thinking about this doomsday unless we see breakdown. Okay, and we'll talk about the factors, other factors beyond the chart. So I'll end this BTC session here, which covers a lot of things, and open up another session for different topic.